Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, January 7th. Slow day today. We got economic news, just one item, really, and it's the trade deficit. Not a huge market mover, but something to kind of keep an eye open for GDP numbers. So it kind of gives you predictions or projections of what, or goes into more details of where the GDP is coming at. So, with that in mind, we'll take a look at the month of October's numbers for the trade deficit, and we're at $39.3 billion. The projection was supposed to increase to 40 billion, and it dropped much lower to 34.3 billion. A lot of it is due to the domestic oil. We're not really buying in or bringing in a lot of foreign oil as this time. So right now we're using a lot of our own oil, which is the reason why we're able to keep the cost of oil down as well. So this is where we have a bit of improvement in the trade deficit. So this is the lowest we've been for quite some time. Let's take a look at the headline news. We got the stock markets up, so they're kind of rallying a bit today. Some of it's stock market related. It's also due to the deficit, so they like those news. We do got some important news later in the week, like tomorrow we got the Fed minutes will be released from the last meeting. We got the job numbers coming out on Friday, which will be a big market mover, brought to you by the Bureau of Labor Statistics. And then there's a comment already earlier today. It was by Fed President out of Boston, Rosengren. He basically had made a comment saying that the Fed will actually, when they do their tapering of the bonds, it will be very gradually because they don't want to have to go back and stimulate more when they still are kind of, there's still signs that the economy, is it still strong enough or not strong enough? So there's still questions on it. So they're going to do it on a gradual basis. It won't be something that they're just going to pull the carpet from underneath the economy. And so just kind of giving them fair warning with their thought processes and with the bond taping. So it'll be a very gradual process. So let's take a look at the bond market and see what's going on over there. Right now we're up about 13 basis points for the day. We did start up a little bit higher, about 3 basis points higher than we left off yesterday. So as you can see, we did start a nice day yesterday. We pulled up, we touched the ceiling, we pulled back, so we resisted. Today we're going up against the ceiling again today. We're up at 99.84. So that gives us basically 18 basis points higher than where we left off yesterday. And basically that's enough for price improvement today. So a slight pricing improvement on interest rates today. So we'll see if we can get this trend going, if this can continue, or if we're going to be pushed back from this floor. As you can see, back in December, we tested it and got pushed back each time. So that does become, every time we touch it and get pulled back, it does become stronger each time. So we'll have to kind of see if we can break through it at some point and stay above it, which becomes a floor and becomes a tougher floor for us to break through on the downturn. All right, folks, thanks for watching. I hope you guys have a great day, but stand by tomorrow. We could have some volatility, as I mentioned, with the Fed minute to be released tomorrow. ADP will probably be out, I believe, tomorrow as well. So thanks again for watching. You guys have a wonderful day, and we'll see you guys tomorrow.